All right, Dylan Langei, branch manager and senior loan officer at Evergreen Home Loans here in Bellingham, Washington. And I know I usually shoot the newsletters earlier in the month. This is August's mortgage update. To be honest with you guys, I was waiting for some better news, some good news, right? Right now, we're sitting at mortgage rates we have not seen in 20 years. Okay, that's the bad news. The good news is, later on in this video, I'm going to explain a product that I've been using to save several of my clients several $1,000s on their interest rates. And I'll explain a little bit more later, and I've got a sub video that will explain it as well. Remember, if you're on this channel, to subscribe to it so that you get updates on new loan products that we have, the mortgage updates, if you're interested in just following the market and new products that are launching in the mortgage space. Okay, my personal website is whatcomhomeloans.com, which you can see right here, which has a bunch of resources if you're looking for the other mortgage updates from prior months, different videos on loan programs, any of my testimonials, and why I am the #1 rated lender in Whatcom County. What I tell people is, why does that matter? Well, when you go on vacation, like Kara and I just went to Italy, right? When we were looking at hotels or restaurants in Italy, a country we've never been to, a place we've never been to, right? We went to Positano. We looked online. We looked at online reviews. We looked at pictures, the food, the menu, right? Why do we do that? We want to see what sort of experience we're going to have, right? That's why I always encourage my clients or, my referral sources, look at online reviews. This is the biggest purchase you will probably ever make, unless you're Conor McGregor and buying Lamborghini boats. This is probably the biggest purchase you'll ever make. So it's important who you work with, okay? Well, enough about me. Let's dive into the newsletter. Okay. Let me make my face a little bit smaller. Okay. So as always, the nugget of the month, right? What I alluded to earlier, a program that should not be slept on right now. It's called the State Bond Program. It's through Washington State Housing Finance Commission. You can look up the program, the guidelines, all of that on WSHFC.org. Once again, in the video that I've shot on this program has all the details. I'm going to give you the cliff notes and why it's important. So if you go to my YouTube channel, and you can find the video right here. Let me move my face. You can find the video right here, Washington State Housing Finance Commission Home Advantage Loan. Okay. This product, why it is important is the income cap for Washington State is $180,000. Okay. This is a statewide program. If you make under $180,000, you pass the income cap. There's also premium pricing if you make under 80% of your area median income in your area. So if you just look at Fannie Mae area median income lookup tool, you can find this. So 80% of that in my area, I just looked up my office, is $82,000. In places like King County and other counties, it's higher than that. If you make under that, you get premium pricing on this product. Okay. You can use it on a 1-unit or a duplex owner occupied. You can do it on stick-built homes, which is just your traditional home, condos, manufactured homes, okay? You do not need to be a first-time home buyer. This is the biggest misconception. There are some programs through Home Advantage. If you want to get your down payment covered, then you need to be a first-time home buyer. But for this product, if you're a first-time home buyer, it's 3% down. If you own another home, it's 5% down. Yes, you can own another home. You do not need to be a first-time home buyer, and you can also own another home. You can also get reduced mortgage insurance from traditional Fannie and Freddie loans. There's government and conventional options depending on your exact circumstances. And you can also get non-occupant co-borrowers. Okay, if you don't qualify, you can get mom, dad, someone else to co-sign on your loan. The biggest thing, there's no loan level pricing adjustments. So what that means is Fannie and Freddie have put in loan level pricing adjustments on mortgages, right? If you don't have over 780 credit, you're not getting optimal pricing with Fannie and Freddie. If you're buying a condo or a manhome, you get hit for that pricing. If you're buying an investment property versus a primary house, you're getting hit for that pricing, right? There's all these little loan level pricing adjustments that if you are not the traditional, got your 5 to 20% down, buying a single family home, primary, over 780 credit, you're going to have what's called a loan level pricing adjustment that increases your interest rate. Well, the state bond program does not have that. The 3 clients I flipped to this program have saved over $7,000. Most of them had about a 700 credit score and were buying a condo. They were getting hit for that pricing. We switched to the state bond loan and they did not get hit for that pricing. Okay. You need to contact me though with your exact scenario and we can run through this. But once again, watch the full video. It's 13 minutes long. It could potentially save you thousands of dollars on your home purchase. Okay, rates. I know I waited on doing this video to hopefully get some good news. Let's just look at mortgage rates, right? I always go to Freddie Mac's, the average 30-year fix. It's the highest it's been in 20 years. Okay. Why is that? Great question. Great question. We're getting a hold of inflation, right? But the job markets remain strong. We've got oil prices going back up. There's so much just economic movement and noise, and it's been tough. It's been volatile, right? This was our last peak, November 10th. We're now at a 20-year high. But let's look at it. So this is on, a $700,000 purchase, 10% down. A 6.99, you're paying 0.875 in points. 1 point is 1% of your loan amount in a closing fee. If I'm borrowing $700,000, 1 point would be $7,000 in a one-time closing fee. So this is where your interest rate's sitting. So if you're buying basically a $700,000 house, 10% down, your principal and interest monthly is $41.87. Okay. So that's where the home affordability thing is tough because we're not seeing, at least in our area in Whatcom County, we're not seeing home prices decline. We're seeing appreciation growth decline. We're not seeing home values drop. Okay. So that's mortgage rates, right? Once again, the U.S. weekly average, 7.23, right? It looks like we're a little bit below that, which is always great. Mortgage applications. I find this is interesting. This is nationally. We saw, pretty significant declines because once again, it's always correlated with mortgage rates. Mortgage rates went up, 20-year highs, right? The news is saying worst time to buy a home. Well, if you read below that, the clickbait, right? Well, mortgage rates are the highest they've been in 20 years. So home affordability is the most challenging it's been in 20 years, of course. But then we've seen a little uptick, right? We're actually seeing some good news. GDP came in lower than expectations today. We've got PCE numbers coming out tomorrow. So once again, I could send this video out. Mortgage rates could drop. They could go up. Take this with a grain of salt, but just make sure to be watching those key levels. Watch the 10-year treasury if you're a nerd like me. Watch GDP. Watch PCE and CPI, which are inflationary numbers, right? If you want to get into the granular details, but or just watch this video. And I'll give it to you in a bite-size piece. So that's where rates are at. The mortgage trend, right? We're seeing up. Once again, I'm starting to see we're at the peak. I keep saying this. I keep thinking this. The people I watch, and no one knows, right? Harvard, Yale level econ professors can't predict what's going to happen in the U.S. and national and global economies. But you got to know about programs like the Home Advantage loan, right? When everyone is rate sensitive, you got to know about products like that. For your friends, family, if you're a realtor or somebody that works with, people, a referral source, you got to know about these different programs. Internal turn times, we're able to close loans in 2.5, 3 weeks. We've got a lot of great programs. Fastest Cash can close in 10 days, no appraisal, no financing. Step Up program where you don't need to sell your home to use that equity. I've got all the videos on my YouTube about this. These are all quick close programs. You can compete with cash. If you're just doing a traditional purchase though, 2.5 to 4 weeks is pretty traditional. Appraisals are coming back in a week and a half. Appraisers are twiddling their thumbs a little bit. They're a little bit slower. So anyway, mortgages are closing relatively quickly. Rates, we're watching them as they ebb and flow. But yes, do contact me if you have any questions on the Home Advantage loan, about rates, about turn times. If, a lot of times people don't think that they're qualified for what they actually are. Happy to do that. It doesn't cost anything. We don't even have to ding your credit. We can do a soft pull. If you have any friends, family, coworkers, myself, my family, we always appreciate your business. And we'll see you next month. And who knows, maybe mortgage rates will be down. Let's see.